Absolutely, Harsh. Morning, and you've summed it up absolutely perfectly. We've got a very mixed handover coming in from the US last evening because on one hand, you do have the Dow that continues to scale fresh record highs, and it's a 1.1% almost uptick coming in on the Dow. The S&P 500 has ended the session absolutely flat, and some selling pressure has come in on some of the tech names and some semiconductor stocks. Like, for example, you had SanDisk that continued to trade lower for a second straight day and saw double-digit cuts for a second continuous day. So those were some of the stocks, the niche basket within the tech segment that saw some profit taking. And on the back of that, you've got some 0.8% cut coming in on the US. The other big talking point in the US, of course, was the US jobs data, and quite lower than expected is what the jobs data was, because US private payrolls came in at just 49,000 on a month-on-month basis versus an estimate of 107,000. So in fact, less than half is what this number has come in at, and very weak. Now, what this does is this gives the street a sense that the Fed hike that the street was largely anticipating, or rather fearing, could be pushed, given that the employment data has come in so weak. The unemployment rate also dropped to 4.2% last month from 4.3%. So that's a very nominal positive coming in. But the payroll gains over the previous 2 months were revised lower as well. So that's a negative coming in. And that is how you should be looking at this macroeconomic data. Other than that, now shifting focus, let's take a look at what the European markets have done. And a fairly mixed rate coming in from Europe as well, because while the stock 600 was looking fairly okay, you've got some very robust moves coming in across the European market. DAX was up 2.25%, CAC was up 1.6%, FTSE also 1.6% gain. So looking very good across the board when it comes to European markets. Let's shift focus and talk about Asia this morning. You know, you had Kospi that was getting a little beaten down in trade. That has seen a recovery. It's up about 3% as we speak. Nikkei doing well for itself, but is below the 70,000 mark. So we're going to be watching for when that changes direction. And also, of course, the yen pressure continues to play out for Nikkei. Hang Seng doing well, finally 1.25% uptick. Shanghai also holding up well, about 0.2% higher in the green. It's Australia that's opened up quite strong, 1.25% of an uptick coming in over there. Let's take a look at what's happening on the oil front. Not much happening over there. You've got flattish moves coming in for both the WTI and Brent. Brent is at 72, but WTI continues to comfortably be below $70 a barrel. Let's talk about the precious metals. Very flattish moves coming in over there as well, but you've got a little bit of an uptick coming in on silver, 62.7, so around $63 is where it is at, 3% uptick coming in over there. Gold is also trying to hold on to gains, currently below 4,200, but yes, 1.5% uptick coming in over there as well. The other big talking point in yesterday's market was, and something we haven't spoken in a very long time, is the entire cryptocurrency basket. Bitcoin itself was up 2%. You had Ether that was up 5%, Solana up 5%. Very good moves coming in across the cryptocurrency pack. So that sums up all the important equity as well as commodity moves that we've been tracking. Now shifting focus to some global comments that we've been tracking. Of course, we've got comments coming in from US President Trump. He says that believe Iran has agreed to about everything that the US has demanded, and this is a denuclearization. This is not a war anymore. And they're saying that he said that Venezuela is doing much better with oil. New Iranian leaders who've come in after the rotation are much rational. Iran has some missile lefts that the US plans to wipe out, and we've heard the comments coming in from Iran side. He said that the tariffs are in place right now, but executing them is running out to be tougher, and he reiterated his plan to use the Iranian funds for food purchases. Moving away from Donald Trump, let's talk about Kevin Hassett, director at the National Economic Council in the US. He did say that jobs data is consistent to its strong economy, although the numbers do suggest otherwise. He said that he respects the independence of the Fed. There is no reason he believes that the growth should cause inflation going ahead. He's confident about clocking in great deals with Canada and Mexico, is what he's saying. And he's also saying that the council is in touch with AI companies to try and understand what the upside is over there. Lastly, let's also take a look at some comments coming in from the Federal Reserve. San Francisco Fed Reserve President Mary Daly says that US monetary policy is slightly restrictive, but with that exceedingly strong investment growth and the move that they're seeing in AI, it's very difficult to say which way the US policy is going to head right now. We also understand from some reports that some leading European powers have now accepted that ships transiting via the Strait of Hormuz will have to pay fees to Iran and Oman. While this is a widely contested topic right now in terms of tolling for ships at the Strait of Hormuz, some European countries seem to have agreed to this. This is just what we're picking up from reports. But yes, that sums up all the global comments, equities, as well as commodity moves we've been tracking overnight.